Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 p.m. here, making it 1200 UTC. Big shout out to everybody joining us live today. You can see we've got a lot of you in the chat already. Really great to see you. Kelly, all the way from New Zealand, our little New Zealand gem. Nipar, Queenie, always bringing the roses. Always appreciate the roses, Queenie. And everybody else is joining live today and also watching this on recording. So, where are we at? So I really want to focus on Bitcoin today, guys. Now, for those of you that are members of the Bird Nest, you would have got my exclusive Bitcoin report last night, whereby our kind of high time frame bias at the moment is made up a lot of this weekly inside bar pattern that we're playing out here. The mother bar and the inside bar both marked on the charts, but we're most interested in the inside bar range at the moment, depicted by the IBH, meaning inside bar high, and IBL, inside bar low. Now we have the midline here as well, which is the red dotted line. Now, the key thinking from us is that, well, if we're going to hold this midline, excuse me, then that would be a show of strength, right? But to back that show of strength up, what we would need to see is a reclaim of this fair value gap and a breakout of the inside bar high. Why is that the case? Well, for me, there's two really clear reasons. All right. So if we highlight this area here, and if we highlight this area here, these both represent the deviations from our inside bar range. Okay. So this is our range high, range low, midline. What happened was price was ranging around here. We set, we come above, take out the liquidity above this high, purge down to the low. We fail to close below that, to hold below that and purge lower. On the reclaim of this, let me zoom in a little bit for you and go full screen as well. Whack! Good afternoon, buddy. Good to see you. So the theory is with any range play, right? Certainly how I approach ranges is I'm looking for deviations or acceptance. If we deviate and we come back within the range, we target the far side of the range, the opposite side of the range, via the EQ, the midline, which is this dotted line, all right? Meaning that on the lower time frames, we look for the breakdown and hold under here. We then trade that down to here, which would be kind of our first take profit, and then also probably looking to move our stops to entry. We can then use the price action, being this fair value gap, to look to price to retrace into it, and then we can look to get short again. Either that or we want to see acceptance underneath the EQ. Now, obviously our main target is the far side of the range, right, which is down here for the inside bar. So when we deviated this, we climbed back inside, we've hit the midline, but we failed to reach the inside bar low here, right? So we can look at this in two ways. One, strength, that price has failed to get there and come back above, and let me also share something else with you guys while we've got it here, if I can find it. I'll just get rid of that very quickly and just clean this up. Right, we're also looking at, for this leg here, we looked at, as price came up to here, price came down and engaged with the golden pocket here, right, between the 618 and 0.66 levels, which is a very commonly used area in terms of retracements. It's below the 50% of the range. So if we were looking at this as our premium and discount range, then we want to be favoring longs from here and shorts from here, right? So this really helped us out. Come into the golden pocket, nice longing opportunities down here, playing the relief bounce, up into the fair value gap above, which is what we said last night, above these cluster of highs, looking for that liquidity sweep, which ultimately broke down. I didn't get involved in that because it happened in the early hours for me over the kind of Asia timings of the session. However, what do we do now? Well, let's pop this back off and we'll pop our main range back on. I think something that we always want to be aware of here is if we're failing with acceptance above a level, right, then for me, the likelihood is that once price then drops back below that key level, and what I'm talking about here is the midline, right? So price came down, failed to run the inside bar low. The reclaim of this level was a show of strength, right? This happened late on Friday. Price action lost the momentum over the weekend. Ultimately, we were looking for one of two sides of the liquidity to be run. That then is going to play into our likelihood of which way we want to open our trade bias, okay? So for this example, once we took out the liquidity here and came back down, look at that beautiful long tail wick, price ultimately started to break down further. Now we're back underneath the EQ. Yeah, we can see we've got this 4-hour fair value gap here defending. So what would I be looking for moves lower? Well, actually, what I wanted to see today was for price to pull up into this before kind of looking to attack these lows. We've got the naked or untapped low sat under there below the prior swing low. And then obviously we've got the inside bar low there. Now, these are the kind of points that we want to show a bit of caution because we could easily see a reversal here and price start to come back up. So for now, I'm looking to see what we get as we start moving towards the New York session, which opens in about 23 minutes time. Or not opens, it will open before that. But my key point of interest from that will start at 1:30. So that's 1:30 GMT. All right, so that's 12:30 UTC. Now, that's when a lot of volume comes into the session from the traditional market hours. And to give you a little example of that, for those of you that don't really trade the timings as much, what I've got on here are a couple of things. I've got this indicator here where you can see the little thin blue lines represent the New York session, and the orange or the kind of yellow ones represent, let me just pop that there, and these ones represent the London session. All right, we've got Asia before. This is just a really cool little indicator called CM time based lines, right? And you can add these different session lines. So the grey and the blue box represent the key starting periods for New York, right? So that's what I'm really interested in seeing. Then when we overlay the context of our bias, for which we can use, a number of different elements, we can use our B Pro, right? So if we're using like the B Pro with the trailer, for example, what do? Well, we've got a bearish bias here. So we wait for price action within our given session. Yeah, we can see here, New York session. What do we want to see? We want to see a fake move to the upside, yeah, which we get here, taking out those highs, right? And then we want to see price break down on the lower time frames, yeah, which would be the M5 or the M3 in this example. We're hunting these fair value gaps, yeah, and then we're trading it down into liquidity that rests below. All right, that's obviously done on a much lower time frame for a scalping system. Okay, so that's the kind of thing we're looking for. The same as here, right? So we're still underneath the B Pro trailer, right, which is telling us that we're bearish. That's our higher time frame bias. We now lose the EQ, which is here. Yeah, we can see price sweeps all of these highs here in this move, ultimately breaking down here, price retracing into this fair value gap, which would have been even more prominent on the lower time frames, and then hunting the liquidity below these levels here. All right. Yakuza Kana, great to see you online, buddy. Hope you're keeping well. So that's kind of the premise of what I'm looking for, right? And we're looking for the ranges to help kind of build out our confidence and our higher time frame understanding so we can decant that down onto lower time frames, right? Now, something else that's really of interest to me here, and we can see now we're down on the lower time frame, price is starting to hold here a little bit. And what I'm asking myself is, look, where's the key liquidity resting? Yeah. So where's the most likely place that price is going to go? I call that clear and obvious. Yeah. Now, yeah, sometimes price does just kind of reverse in the middle of nowhere, but often it doesn't, right? The reason we were so interested in these highs is because the liquidity resting above them, the same way that we look to target equal highs, equal lows, and also higher time frame levels, right? Something you can do, for example, is monitor the reactions that you get at previous days' highs and lows. This, again, is just a nice free indicator that you can get on TradingView, just called previous day high and low, right? So if we do that, and let's just turn the range off for a minute as well and just kind of remove some of this noise that we've got on there, right? So all we're doing here, and I'm going to pop session breaks on now as well. For anybody that doesn't know how to do that, you just double click the middle of your chart, go to your chart settings, and then on events, you can just click session breaks. All right. You can choose the color and how bold you want them and thickness. For me, I don't like them to be too obtrusive, so I just keep them nice, thin and gray. So these vertical lines that run down. All right. Now, while this can look a little bit busy, once we take it into the context, right, what I'm looking for here is a study on how price reacts at key liquidity levels. Yeah. So those liquidity levels can be made up of daily opens, weekly opens, right? You're looking at monthly, quarterly, yearly as well, right? That's why you'll see some of the best traders in the game, people like Trader SZ, and not just traders, but the best kind of range traders and day traders, especially. Trader Dank is another great example, right? Looking at these key areas of liquidity and where price moves, all right? So just by putting something like this on, we can see here we've got our different days. Now, what I'd encourage anyone to do is go away and study how price engages with these, right? So, for example, here, right? Deviation of this high, prior day's high. Let's do that in something that doesn't look so ridiculously lipsticky, right? So here, yeah, this deviation of what? Of this high. Where's that high originate from? Here, yeah. Price runs that, swing fails it, breaks down. Ultimately, that's what gives us our short trigger, right? What happens here? Yeah, price runs these equal highs, which are also the prior day's high. What this indicator is doing is it's taking these highs and then projecting this line across, all right? So ultimately, what do we get again? We get a deviation of this. This was our low time frame breakdown. You can even see the line that I'd drawn on at the time. Price sells off to the downside, right? So as we're looking for this is the key thing for liquidity, right? Now, why does liquidity work that way? Yeah. And sorry, just to reinforce it again, but we run the prior day's low here. Look, we recover bullish structure. What happens? This giant downside wick here runs this prior day's low, which is this, before the bullish recovery, right? Now, you get this very heavily in range bound situation. Because it's all liquidity games, right? You're talking about where there's selling pressure, right? So price has sold off from here, here. When we revisit it here and take out liquidity resting above here, why wouldn't it make sense to trade it off to the downside? The flip side of that as well is that when we target that in line with other confluence, yeah. So prior day's high represents a key area where price sold off or where price didn't go beyond. That was what was capping the market on our low time frame scale. So when price goes back there, yeah, if you're a big player, you're someone that wants to get orders filled, what you want to do is push the market up in a way to convince a lot of people to jump on board and think, okay, actually, look, we've taken out this level now. If we can flip this level, we're going to go long. Also, people that were short here, their stop losses are here, which are buy orders, right? Because they're short, their stop losses are buy order to buy it back. So you're going to generate a lot of buy orders here to fill the sell orders of bigger accounts, right? That's the very kind of simple theory of it. Let me just pour out some of my tea. Kelly, you absolute legend. Yeah, please do hit up the likes, guys. If you are enjoying it, obviously don't feel obligated. Just helps the algorithm on YouTube kind of fit it to people that are searching for it, right? So finding the right kind of fit for people that are interested in this kind of stuff. So I really do appreciate that, Kelly. So that's a really interesting thing to do. Get a lot of my mentoring students to do this, to look and learn how price engages with liquidity, right? So prior day high, prior day low, right, are ways that we can do this. Session high, session lows as well, right? New York, Asia, etc. And then from there, we're then decanting that down onto a lower time frame to execute, all right? Nitpal, my friend, BC. Would that apply once on the chart? I see you're using a 15-minute chart. Could that run occur more than once a day from previous day high or previous day low? No. So basically, the way that I'm looking, let me just pop this back on for you. So what I'm most interested in is what I would call an untapped liquidity pocket or source. Yeah. So when we're looking at a chart right now, what's really of interest to me here is, look, we've run the prior day's low. Yeah. However, I personally put a lot less weight on weekend price action as I do as price action in the week, purely because the volume's a lot higher in the week when it's in line with traditional markets. All right. So, however, it's still significant because when I'm looking at this chart, I'm asking myself, where are the stop losses? Yeah. So under here, right? We ran that. Did we get much of a reaction? Absolutely not. Yeah. So all of a sudden we can sit there and say, okay, well, we ran the prior day's low. We also ran the prior day's low here. We've not seen a reaction. That to me is a sign of weakness. Now, when we've dropped here, we've left this inefficiency, this fair value gap, which we can start on the H4 and then we can decant that down again through the lower time frames to kind of really pinpoint it. But what I really wanted to see here, if we were going to sell off, was price to come back into here, yeah, do something like this, which would give us a chance to get on board, yeah? Now, the reason that this pattern is important to me is because we're running up, we're recovering, yeah. So price is having a relief bounce, if you like, yeah, a corrective move. It's coming into an inefficiency. We see a move like this where price comes up, sets a high. That high gets swept like a swing failure pattern, similar to this here, yeah, but on the lower time frames. We then break market structure or shift market structure. And the importance for me in this move is that you've got an energetic move to the downside, yeah. So what I mean by that is that it leaves displacement. Okay. So when we look at the move here, for example, let me just clean this up. We can see in this move lower that took out market structure here. So higher high. So we come in lower high, but higher low. Higher high, right? The break of this low is where the market structure shifts. And within that, we have this inefficiency, right? That's telling me, or I'm interpreting that in a way that the market has moved, the sellers have stepped in, that energetic move to the downside is telling us that we can look for areas that we can get involved as sellers, right? Now, if we don't catch the original move, we need to be very aware of where our liquidity is, yeah? We can see we have key liquidity resting lower. We run this internal range liquidity here. Price recovers. Where does it recover to? The fair value gap left in the secondary movement, right? So you can then dial in on a lower time frame. Just to give you an example. Yeah. And then you can pick your entries here a number of different ways. You can use breakers, you can use the line which it breaks, which I would call the breaker line. You can move up into your breaker blocks, yeah, which would be this group of blocks here, the down move before price ran this high. But basically, there's a number of ways to do it, and I will get that entry technique thread together for you guys as well, so that we can cover that in a little bit more detail. But in terms of the tapping of liquidity as such, what I'm looking for is it to be an untapped high or low. Yeah. So let's say, for example, well, not for example, but this hopefully answers in a bit more detail, Nick, is that where we've now run this, yeah, what I'm saying to myself is my theory is now if this recovers market structure here, I'm not so much interested in trading this up into this, although I do think this is where price is going. Not quite enough percentage in it for me to day trade it in there. So the risk to reward isn't there because the fees would just be too high. All right. For my system anyway, right? Because if we look at this here, price break structure here, then we're looking for a retrace. It could go anywhere from here. It could start to reject, right? You're looking at 0.42%. I like to see 0.6, 0.8 ideally percent in a move, because then you don't have to put too much leverage on it. And you have to remember as well, obviously, that you're going to pay fees for, how high your position size is on there. So your position size would be massive. So for me, the higher probability setup is we come in and we do something like this. However, if we come in and we form a base like this, right, but we fail to break down here, right, so we don't get this move to the downside, price comes in to this area and really starts to hold, yeah? If we start seeing something like this, right, so the opposite, you're seeing a sweep of the lows, you're seeing this kind of mini range that we've created here, deviation below, a breakout above, and then a retest of this area, I do think price could continue to push up higher. So what I'm doing here is I'm giving myself a couple of options, right? I'm saying to myself, okay, I'm not going to try and guess what the market wants to do from here. I'm going to pick my levels, and then I'm going to ultimately make a decision when price gets there. So with that in mind, and let me just turn the session breaks off just to tidy this chart up a bit. Right? With that in mind, the naked or untapped low below us at the moment is this one, yeah, which is sat around 26,480. So again, should price come down lower, yeah, do something like this, where we get this recovery, yeah, ultimately we would then look for that same kind of pattern to go long, yeah. So price sweeps this low, recovers, and then on the lower time frame, we look for that sweep, shift of structure, retrace, and then we look to get long. And in fact, if it did that move from here without retracing to that 4-hour fair value gap, I'd also give that more weight. All right. How do we know to stay out, or how do we know if we're wrong? Well, first of all, if we play this setup, price gets to here, we're wrong below here. That's our invalidation. Price breaks down here. So let's say we go long, it fails around about here somewhere, and then comes back to the downside. Well, then for me, all of a sudden, any retest of this and a similar pattern to the downside, right, is then a higher probability short into the liquidity, which is resting here, which we've taken from untapped liquidity here, right, that also lines up with these equal lows. All right. So it's all about probability of working out where a reaction's most likely, and also whether we're going to be looking for continuation or if we're looking for a reversal. So let me just tidy this up again. So hopefully that's clear, guys. If you've ever got any questions on these, please don't hesitate to be active in the chat. That's exactly what I'm here for. Is sub 20K? Okay, so question coming in from our friend. I mean, my pronunciation's hideous, so I'm going to go for Pubo Kaizam or Pubo Kaizam. Really, really sorry. I've probably murdered that into oblivion, but it's a good question. Is sub 20K BCC still on the cards for the rest of 2023? Well, let's have a look. Yeah, let's take a look. Good question. Let's take a look at some higher time frame stuff. Pop these off just so that it doesn't get in the way. So one of the key things for any successful trading system for me is to really focus around simplicity, right? A lot of people say to me, how do we get real conviction or manage to kind of calm the mind in a way to take these setups? Nick, you're very welcome, mate. And actually, it's a really, really interesting question. So we've got an amazing company psychologist who's also an incredible trader called Jimmy. His handle is Your NLP Coach. He's going to be with us in Berlin. For those of you that don't know, we're over at the Berlin Web3 event. It's going to be Europe's largest Web3 event. I'm going to be hosting live workshops over there. Obviously, Burby's going to be doing a keynote speech as well. We're going to have a panel topic discussion too. And we're going to have a stand there as well, guys, running loads of offers, competitions and bits and pieces. So if you are over there or you're able to get involved in any way, please do come and say hello. And if you're not, keep an eye on Twitter, all right, because there's going to be some really, really cool giveaways and that. But one of the really amazing things, and this should all be recorded for later viewing as well, guys, for if you can't attend, Jimmy's going to be running a psychology workshop, and I find his stuff absolutely fascinating. But we had a discussion about this recently, and I wonder if this would make would make good for anyone. Craig, I'm so sorry, mate. I hope the work call goes quickly. Yeah, no worries, bud. And always reach out, mate. If you listen to anything afterwards, you've got questions, I'm always here. So before I digress, one of the questions he was raising was about confidence, right? And saying to ourselves, okay, how do we have conviction as traders? And everyone has it slightly differently, but for me, it's a really, really big thing for me. It was having confidence in the system I was trading when I was quite new to trading. And even after I'd been trading 3-4 years, I still found that, it's still very hard to ever know exactly what is moving the market, right? And if you need to really be at peace with that, that's something that you really need to come to terms with in your own minds. For me, it makes sense that psychology of traders, buyers, sellers, everything is always reflected on a chart. So that's why, for me, price action is such a pure thing to study. I know some amazing fundamental traders as well. There's a lot of different ways to skin a cat, as we would say, another crazy British saying, meaning that there's just a lot of ways that you can go about the same thing. However, for me, it's having confidence in the system. So what I like to see is I like to see repetitive models that I can take across all the time frames. Craig, you're so very welcome, mate. So very welcome. So what do I mean by that? Well, look at what I was just discussing on the lower time frames. Yeah, what are we looking for? We're looking for key levels to be swept, right? So look, this was our key low, right? So let's just draw that in. Before all this price action played out, we set this cluster of lows here. Remember, I was talking about resting liquidity. Then we're asking ourselves the question of what price is going to do. When price ran these lows, you would get a lot of people start to FOMO in shorts here. You get all the negativity coming out on Twitter. Oh, we're going to zero, etc. Now, what we want to do is study this. So this is a weekly chart, right? So this is just showing that we can take price action theory and break it down across different time frames because price is fractal, right? Meaning that it repeats the same patterns across different time frames. So what's this? This is our bearish fair value gap. If we wanted to go short, we would have been waiting for price to come back into this area, looking for our short setups and ready to sell off. However, this was very significant. When price reclaimed this with a bullish fair value gap, this area here, which will extend to this fair value gap now, becomes a balanced price range or definitely a key area of interest, I would always recommend anybody go to the source of information like this, which was a technique that I studied many years ago off of ICT in his original core mentorship. This is something that's been released, I believe, a little bit later on as well, although was touched upon in early series. But it's basically like your inverse fair value gap theory. All right. Now, what we're saying is the inefficiency that was left here, was then retraced completely, leaving ultimately a bullish fair value gap in its wake. We then want to see this block act as support. So we're then looking for price to retrace back down into here. Ideally, you want to be aware of your, whether you take that from there, the start of the move, or if you take it from the base. You want to be aware of your premium and discount, meaning your high probability setups for longs will come from discount and your high probability setups for short will come from premium. So price all of a sudden has given us a really nice collection of confluence here saying, look, bearish fair value gap on the way down, retrace through with a bullish one here, which we want to see act as a base of support. Price runs away. We don't want to FOMO in here. Look, we're taking out key highs here as we step in. Look, for example, the same thing that happened to us here. So I'm just going to get rid of this range quickly just for clarity. So what did we see? We swept our key area of interest, which is the liquidity below the lows. We ultimately shifted structure here, leaving a fair value gap. Price retraced into that fair value gap. That's where we got long. Initial target, is resting liquidity. So we're looking for this, which is our order block, right? Or we're looking for untapped highs. In this case, if we were short, we'd obviously be looking for untapped lows. So what did we get here? The same theory of price. Price came in, took the liquidity out from the highs, correcting lower. However, we're still now in a bullish structure. We've got higher highs and higher lows. So our theory is we're looking for the low side liquidity to be run. We get confluence from our balanced price range, allowing us to go long. Now, in a similar situation, what are we looking at now? We're looking at price coming into this order block, which I'm just going to allow the lower wick to the body, but ultimately we would actually be allowing for this, right? So I will show the whole thing. Don't want to be lazy. Now, as we come into this, see how we respect the equilibrium, which is just the 50%. You can just draw Fibonacci on that to be sure. We wick above it, but we don't get any closes. Price ultimately breaks down. That's no different to how we'd be looking at this on a 15-minute chart or a 5-minute chart, right? The key is that we have our higher time frame bias, and that then gives us, we decant it down. So how do we apply that? Well, if we're starting with the weekly, I know I've already got one of these on here somewhere, but I'll re-add it again. Here's our weekly fair value gap. So ultimately, when price was rejected higher, this is where we're looking for price to draw down into. Now, remember what we said about premium and discount? So if we draw our premium and discount range here, we could be safe in assuming that price is now looking to get back down into discount in order to set up some more long positions. If that is the case, then this weekly fair value gap has even more confluence, or has even more interest. So now when we move to a daily, we're saying, okay, well, what plays into that theory, right? Ultimately, price flushed out these lows here. See when it came up, this is where we shifted market structure here or here, right? For me, a swing low, or a low consists of a low here, the middle candle flanked by two higher lows. Same way that a high is the middle candle flanked by two lower highs, right? So price comes up, takes out these lows here. Ultimately, what happens, and you can listen and see how this kind of has a lot of similarities to what we were just discussing. Price comes up into this order block. Remember how it did similar on the weekly, So we're taking our weekly, we're looking into here. No point jumping into shorts here, because you've already had a big impulse move lower. Chances are price is going to correct a little bit higher and give you a better entry. Also, you wouldn't want to enter there because your stops would have to be above here. And the risk to reward would just be terrible, right? So we say to ourselves, this is a point of interest. This is the shift in structure. When price revisits, our area of interest. Why? Because this is in the upper part of our premium discount displacement leg, Just very, very simply meaning that here to here, So we want to be looking for shorts up here, longs down here. So this order block holds, ultimately price breaks down, and then we can manage that on its way down by using exactly the same principles, right? Fair value gap, Price takes out this low, yeah, reaching for liquidity lower, retraces into this lower time frame. We find our short setups for price to go lower. So, with all that said, where does it leave us now? So these equal lows here are a key point of interest for me. You know, whenever we tap into equal highs, equal lows, or relative equal highs, relative equal lows, they don't have to be pinpoint. What we're talking about, does it look like engineered liquidity? Yeah. Like, does it look like an area that we could get some kind of reaction where there's going to be stop losses, right? Think about what you're taught. Think about things that you learn, especially retail and not just retail, right? And by retail, I include myself in that, TBN, all of that. We're talking about major institutions here and how they move money markets, right? So we want to see clear and obvious targets, and equal lows and equal highs are very often them. So we've got our weekly fair value gap. What else have we got here? We've got these equal lows. We've got this untapped high up here. Now, when we drew our Fibonacci in earlier and we saw we had the retrace to the golden pocket, we had a very weak reaction there, and ultimately price has since broken down. So with that in mind, are we favouring lower timeframes? Well, for me, it very much depends on the time frame we're looking to trade. Yeah. So on the weekly, we can see we're still in a bullish structure, but what helps us play into that is, even though we're bullish, we're still targeting down here somewhere, yeah, for a reaction. Why? Because of the same theories we're overlaying on every time frame, right? The premium discount of that leg, the 50% is down here somewhere, confluent with price running these equal lows, meaning that if I was a big player wanting to fill my bags, yeah, and I want to pay out an absolute wedge on this, yeah, I'm not talking about hundreds of thousands, talking about tens, hundreds of millions, right? Sometimes more. Well, I want the market to be going the opposite direction of where I want to go. Yeah. I want everybody to be thinking that when we get down here, price is going lower. Why? Because all of this, yeah, is going to turn into sell orders for me to fill my buy orders to then reverse the market. Yeah. You hear the term often, bear trap, bull trap, etc. Same thing here. Bull trap, driving them down, get people bearish, get them on board, take out the stop losses of people here, get all those sell orders, sell to fill my buy orders, and price goes up. All right. So for me, there's a nice lot of confluence there. Yeah. Now, something else that's of interest, if we take this fair value gap here, yeah, and pull this back, we can see once again, let's turn this purple like we did with our other balanced price range, that this has become, bullish fair value gap, blasted through with a bearish one. Ultimately, now as we drop down to a lower time frame, we can see how that acted as resistance. If you're a candle trader, this was just beautiful because you can come up, you see we're looking at this area here for the reaction. Price comes in, what does it do? Sweeps these highs, forms a beautiful pin bar. So I did a thread on pin bar recently. You can find it pinned to the top of my Twitter profile if it's something that's of interest. But this long, like, shooting star or hammer type candle, inverse hammer, where you see the small kind of body, a very, very minimal nose or none at all, but this long upside wick, yeah, in the same respect that you see the reverse here, right? These are often showing us that price has really dipped in, all of that volume's been brought up to close here, and we can see them quite often as reversal candles. You can see another one here. And again, when you're studying this, really get your head into price action. Go and find yourself a little indicator that highlights pin bar candles, yeah? And then just sit there. In fact, I think there's one. Yeah, here you go, pin bar, right? Just pop that on and see how it highlights them, yeah? The green ones, the red ones, the blue. I don't know why it hasn't got that one. You might want to find a better one than this. But the idea of them is when you're trending, so price is reversed here, we're trending up. Look how the pin bars are signaling the strength on the way up. Ultimately, when we get the bearish pin bar here, we start to look on the way down. For me personally, that's a pin bar, but also this one. I don't mind there being a slightly bigger body on there as long as you've got the real nice tail wick there as well, right? Also, Pedma7 did an amazing piece on these kind of patterns with confluence, but I won't digress too much. But make sure you go and check his stuff out. Brilliant database trader. So we get the pullback into here. We're looking for lower prices. Let's go back to our daily very quickly and just finish off addressing the gentleman's point about, or lady's point, sorry, Pubo chiasm. God, or if someone can tell me how you pronounce that so I don't sound like such an idiot, and I don't mean to be offensive to anyone, that would be great. But Similar situation here. The question is sub 20k still on the cards for Bitcoin? So, well, let's look at what's sub 20k. What's drawing price down lower? This. Right? So let's just do this slightly bigger. So this is round about 19.5, yeah? About 19,500. On a daily scale, we also have this order block in here, which happens to be a nice pin bar candle, yeah? So if we draw that across as well, I'm saying to myself, well, if that's the real lure for price, yeah, then do I need to go short from here and hold it all the way down to there? Absolutely not. Certainly not how I trade. But what's our story? What's the story that convinces us that that's going to happen, right? We need to get through a lot of liquidity games, right? We've got these equal lows. So what would we want price to tell us? First of all, we have these inefficiencies here, yeah? So price has shot up here. Yeah, we can see leaving these fair value gaps. So price often likes to rebalance these. Now, what can play into our theory about that is if we run these lows, yeah, and we retest in here, and then we continue to run further down, yeah, and we hold again in here, and then we're looking to run further down, right? Now, I know this might look like a really simple little arrow, right, but I'm going to give you the context behind it and why it's lined up with these. So, equal lows here, also this daily fair value gap, which sits inside the weekly. So let's draw this across to here. Do that in a slightly darker grey. So if price loses these equal lows, right, violates this bullish fair value gap, the equal lows and the bullish fair value gap, both things we'd want to see support price from a bullish perspective. If we lose both of those, come down, retest this area and start to break down on the lower time frames, then from there, I'm then looking to short to the next level, right? Because we'd also take out this order block here. Now, the next levels that price is being drawn to is the liquidity below these lows and also this order block, right? Via these fair value gaps here. So what it was allow us to do is find when we fill this one, we monitor the price action. Once again, if we get this correction, yeah, we would be targeting in here a fair value gap left in this leg down. And we would monitor the price action in there. If this ultimately broke down on the lower time frame, yeah, so we lose our market structure, price is bearish, then realistically we've got this target next. So for me, that's what I'd need to see in order to be targeting 20k. Is it possible? Of course it's possible. Absolutely anything is possible in financial markets. It really, really is. You know, Bitcoin's correlation with stock assets, correlation with the S&P 500, equities, DXY counter correlation, bits that flip in and out. There's a lot of noise, a lot of signals, right? So what's really important is we understand our time frames, how we want to trade them, and we make sure that we've got the confidence we need to get ourselves through to our own trigger mechanisms. All right. So for someone like me that trades the New York sessions very heavily, I know what I want to see heading into New York. Right. So I'll give you an example for today. If we take this down, if we clear some of this up, and we move this down onto the lower time frames. Going to flick our low time frame range back on. Clear these up very quickly. So what have I got here? Since we had since this range was established, right, we've come up to here, set this high, purge down to this low, right? This drop, this displacement here, we took out liquidity above this high, liquidity above these lows. This then becomes my dealing range or my trading range. I'm favoring short positions for the upper quartile, long positions from the lower quartile, right? Or below the EQ or above it, yeah? But also what I'm doing, which shows a bit easier for you guys if I put this indicator on as well. Price is up in the upper quartile, start of the New York Open, price runs this high, we'd favour shorts to the downside. All right. Saturday, so weekend, what happens? We take out these equal highs here. We're again up in the upper quartile, favouring short positions. We short it down to the EQ. All right. So in here on Sunday, I didn't trade Sunday. I very rarely trade weekends, as I said. We would have really wanted this higher to be taken, but we did sweep this higher, right? Price ultimately didn't break down below the level, but on a lower time frame, we probably would have had a breakdown pattern there, meaning that we would have been stopped out. However, we then see that the move materialize later in Asia. So what do I need to see here? Well, for me at the moment, I'm not really looking to short this because we've had this big move down, right? Being late to these type of things very rarely pays dividends, all right? If we ran these lows or we recovered this high, then I'd be looking for potentially short scalps into this, or long scalps into this, although possibly not with just such a small percentage move. However, when price does get into here, and we sneak above this 50% and we're high probability for shorts, then all of a sudden I can then overlook, and let me just get rid of this H4 FVG quickly, because we can now refine this down further. I can say to myself, right, on a 15-minute scale, here's my fair value gap. Yeah, that first point of interest. I want that to be above the 50%. Yeah. And then I can also add the confluence of where are my up candles. Yeah. Before the move lower, meaning that this is the order block that I want to see defend price. Yeah. So remember, when you're looking at markets or on any level, right? You take a high, a low, any kind of move. What you want to see ideally, use this one for an example, price comes up, takes out this high, sets this order block here. Yeah. These down candles before the move higher. Now, it often is a lot cleaner on equity markets, right? Crypto is a little bit wilder, right? And does obviously have liquidity issues sometimes. But ultimately, you want to see this hold, right? If you're bullish, you want to see the down candles here defend price, yeah. And ultimately, if you're bearish, you want to see those candles defend. You want to see the up candles defend price. How can that help us? Well, if we violate that rule, yeah. So, any examples? Let's take the current drop. Let's see what happened here. We're coming up. Let's just draw out this to start with. So this was our order block in here. Price came up, set this order block. We didn't even fully retrace into it, right? Then, however, price had this pump up here. This was the last down candle before the move that broke price, that broke market structure, or took out this high and kept us in market structure, leaving this inefficiency, which gives us a little bit more weight as well. Ultimately, look how this supported price, helped keep us in this. Eventually, what happened? We moved through this level. Again, remember earlier I was saying to you, for me, it's so important how price moves. See how price shattered through this level, leaving this inefficiency in here, this breakaway gap, right? That for me, then when we came back under here, we've shifted market structure. We can then look to be short in there. But ultimately, the real key place to be active in here, if it had certainly happened within my time frame, was this fair value gap, right? And what happens? We set this fair value gap, price breaks into this, we get our breakdown, price breaks down further. So now we're looking for the up candles here, the order block that led to the drop to defend. Ultimately, price didn't return there. However, should it do so before running this low, right, or ultimately this swing low, then I still think we could come back up into this area before going deeper. What would change my mind on that, right, would be taking a long into this, seeing this reclaimed, then I would hold my position looking for higher prices. All right. So you can always look back and study with price action in terms of how it's going to kind of look and defend positions. And obviously, again, it's fractal, right? So on any time frame, it's what you want to see, right? Shift market structure here. We leave these order blocks. Yeah. That ultimately defends price here. Shift market structure here. This is the order block before the big drop. Although it didn't seem significant at the time, because we didn't retrace into it, when we came into it here and ultimately here, it shows how important it can be to look at those. Because however you study order block theory, and I've studied some really great people on this, ICT, supply and demand series as well. I mean, crikey, you can go back to sort of the godfather of it as well, like Larry Williams and people like that. The whole idea really is we're looking for where these order clusters are, right? So if this was the move up before the selling pressure ensued, we think of two things. One, if people were wrong here and they were going long and they haven't closed out their position or managed their risk, when price returns there, they're more than likely going to want to close out at break even, meaning that you're going to see a lot of selling pressure here, all right? Often get these deviations, right? These liquidity sweeps before those breakdowns, all right? But that's kind of something different. So with order blocks or supply and demand areas, you're just looking for those areas that are capping the market. So ultimately, this, for example, has been a really important one. Yeah, so let me just get rid of that very quickly. Price came up into here, this up candle, price broke down. Yeah, sets this other smaller order block within here. We get this breakaway, price revisits here, ultimately can't get above, breaks down, retests, and sells off. All right. So I know that's been very, very BTC focused today, guys. I wanted to kind of do something with you, which was just a little bit more focused on that in current price action. We're getting a lot of questions about Bitcoin at the moment. Obviously, this applies to any of your stock indices as well. Your equity markets, any other form of crypto too. Like I say, we're getting prepped for a big weekend in Berlin. We're going to be there Saturday and Sunday. I'll be traveling there Friday as well. So I am going to do the webinar on Wednesday. We will do some alt requests as well if you've got any of those, or we can cover equity markets too. And then, yeah, it will just be next Monday while I'm still in Berlin that I won't be doing that. Although, depending on what kind of time I have flying back at the airport, I might try and do just a quick live session from there. But do please keep your eyes on Berlin. There's going to be some really, really cool stuff going on for that. And I'm really pumped to be there with a lot of the Burbnest team as well, and some other really, really cool people who are there going to be sponsoring it. So obviously, if you do get a chance to attend, please do come and say hello. It'd be awesome to meet some of you guys and girls. And also as well, if you don't, look, keep an eye on Twitter. I'll be pumping out loads of stuff on the Twitter account, so all the TBN. Don't forget, we've obviously got our offers going on as well, and you're going to be able to grab some really, really sick deals. And also keep an eye on our new merch range, which is just about to be released too. So with that in mind, we'd just love to say a big thank you to everybody for joining today. Really do appreciate you all giving up your time to listen to me ramble. If you've got any questions, do reach out. You can go and grab yourself a free trial at the Burbnest. You can get that in the description below. If you can't find it, do reach out to me. You can get the trading team calls. We started the week really promisingly already today. With 3 wins from the MBS system, as well as some trade setups that the team are getting ready to put live at the moment. So the week's off to a fantastic start. If you want to get those calls for free, you can do so just by clicking on the link below, which is our partner Bybit. All right. I think you only have to deposit like $100 and you get a month of access to free calls. All right. And between you and I think you can then do that again to get another sneaky second month too. All right, guys. Look, big shout out. Huge thanks to all of you. Really do appreciate it. If you've got any questions, please don't hesitate to reach out. You can reach out to me on Twitter as well. All right, guys. Big week coming up. Really pumped for Berlin. Really looking forward to seeing you guys again on Wednesday if you're around. Let me know if you've got any alt requests, and have a fantastic week.